So a very successful week so far. If you remember from the Sunday videos, actually in the title, I was looking at Microsoft, Apple, as well as the S&P 500 for bounce setups. First of all, I'll go over Microsoft here very quickly. We did have the break that I was looking for above this downward trend line, very similar to what I was looking for on Apple, because Apple was nearing this downward trend line on Friday of last week, and it was able to break above this. So on both Apple as well as Microsoft, we saw a break above the trend line. I said I was looking for 15-minute to hourly confirmation above before entering a long position. In both cases, we got both a 15-minute as well as hourly confirmation. And we did have a lot of continuation afterwards, including after hours today because of Nvida's earnings, which I will go into a little bit later in this video. So make sure to stay for that. But very nice setups overall. Again, Microsoft was able to break out. So far, it's been a clean breakout with daily confirmation, as well as Apple here. Clean breakout all the way up to my first minor supply zone, and was able to get above that even throughout today. And then we had consolidation to end the day. So very successful setups in terms of big tech so far this week. And I do want to also talk about SPY because it's been on a tear the last 2 days. If you remember, in the previous week, I was looking for a minor bottom to form before a pop starting. I ended up being early on that because I was interested around this area, the mid 443 to like 445-ish range. We ended up going a little bit lower afterwards. I'm assuming that's because of OPEX. It actually pulled price down into OPEX because OPEX was on Friday before beginning the move up. So my timing was a little bit off on the initial call, but based on Sunday's video, I said I still am looking for some type of a minor low to form, which in fact that has formed, as well as a pop out of that minor low, basically short covering in the short term all the way into the end of the month, which we are seeing so far. Now, there is a slight caveat to that, and that's because we do have Jackson Hole coming up. The meeting starts tomorrow on Thursday, but the main event, at least where Jerome Powell kind of shares the layout for the year, that is on Friday, so you can look for that. There's a potential dip buy opportunity, in my opinion, after that. So for example, if we do have a downside move after Friday going into Monday, I will be looking for some type of a dip buy opportunity because in my opinion, I believe we will be in a upward trend into Labor Day. So that is the first week of September. And then of course, if you are subscribed to this channel, you know I am looking for a larger downside move to about 4,200-ish on the S&P 500 by the end of September. So I will be looking for a short opportunity, but for the moment, what I've been looking for the past 2 weeks now is this pop opportunity, which we are amidst right now. And thankfully, we were able to catch some of that upside move with these breakouts, like I mentioned earlier in the video, on Microsoft as well as Apple. But like I said also earlier in the video, I do want to talk about Nvida's earnings. I have Nvida's flow already here on Cheddar Flow. And I was looking through it after hours after we saw the large move up, which by the way, I will go over to the chart just to give a basic overview of what happened in terms of technicals. We had a very, very large upwards move. It was at 510 at one point during after hours. Right now, it's about 504 afterwards. Very large move to the upside, about 7% in total, as you can see down here. And this is coming off of their last earnings, which also blew it out of the park. If you remember that huge gap up that everybody was trying to short afterwards, all the way from over here, it's like a 30% gap up all the way to about 380 where it opened afterwards. So this is another large gap up, and this is a gap up to all-time highs yet again. Very rare to see this type of momentum, but Nvidia has been able to handle it. And it also makes you wonder, where was all this buying coming from over here on Monday, August 14th? Did these people know that they would have good earnings coming up? Because this came out of nowhere, this very large upside day. This was over 7% to the upside on this day when the rest of the market was kind of subdued. But nevertheless, going back to the flow over here, we did see more calls than puts today. Now, earnings can be a little bit difficult in terms of trade setups. It's more of a gamble, honestly, but you can still look throughout put and call flow to get a gauge of what might happen. We did have 77.9% calls to 22.1% puts today, and there were some fairly large calls before the bell. Also, there were even more so call and put selling, so people that were trying to collect premium ahead of the earnings because the IV for this earnings was insane going into the event. So honestly, the smart option would be to sell puts or calls. So we did see quite a bit of that throughout the day. You could see here put that was being sold, a call being sold as well. But also we had some directional bets before the bell. We had 1.2 million in premium at the 485 strike. So this one ended up being very lucrative for them, or will end up being lucrative tomorrow morning. Now, of course, there is the IV factor, so we will see, but I do expect this one because it is quite a bit in the money at the moment. I do expect this to be profitable by tomorrow morning. This was for the 1020 expiration. And then we also had this 500 call for the 915 expiration, 2.2 million in premium. So this one also will probably end up being lucrative tomorrow. Of course, there were also some puts, like over here, we had 1 million premium. This was a little bit earlier, about 40 minutes before the bell. These were a little bit closer up here within like 15 to 30 minutes of the bell. But over here, a 1 million put for the 460 strike. This one did not go their way for sure. And you can see throughout the day, there were a decent amount of directional bets as well as that call selling, like I was showing you earlier, and put selling. But for the most part, you can see a lot of these calls being sold at 1.7 million. And then over here, about 1 million overall. So they were trying to collect the premium on that. And we'll see what happens when it opens tomorrow. Again, the expected move was very high, as I showed you earlier, but there was certainly very active flow throughout the day for Nvda. So it's interesting to look at. And I also want to mention the dark pool levels for today. These were not as active as what we saw in terms of Nvida's flow. Only 1.2 billion in premium and then 1.1 billion just a tad under. These were within 1 cent of each other. So you could equate it for more than 2 billion in premium. There's also a 2 billion print, a little bit lower. This was at 438. And then these up here were 442 highs. A lot of these did come in near the close and also after hours. So that also is notable because for the most part during the day, it was only like 500 million in terms of dark pool premium for signature dark pool prints, that is. So not a lot of premium throughout the day, but it did have an uptick by after hours. You can see also if we go back to Monday, so I can give you an overview of the last couple of days. As we scroll down on here, we of course have the ones from today, 1.2 billion as well as 1.1 billion. As I scroll down even lower, we had 2.5 billion the other day at 439.30, as well as 3.8 billion. This is the largest print of the week, at least for signature dark pool prints, at 438.09. So this was most definitely a form of a buy because right now SPY is sitting a lot higher. It's about 445 after hours. So 3.8 billion is definitely a large amount. Good to see this, especially earlier on the week before the rally started. This is a good confirmation signal of that pop beginning, the pop that I've been looking for. And then, of course, we have the 1.1 billion in premium at the 436.30 level. So a nice base around 436 to 440 on SPY in terms of dark pool prints. And that was able to propel price upwards as we've seen so far today. And I do expect that trend will remain valid. Of course, there can be some type of a dip after Jackson Hole, but for the most part, I do expect it to be valid going into the end of the month before there's an eventual short opportunity, which I of course will let you guys know when I'm interested in that. And the last thing I want to mention today are at least two things that are basically intertwined. We do have the dollar here, and I'll also talk about the VIX in a second. Something very interesting happened today that is mostly went unnoticed. There was a fake breakout in the dollar today. We had a lot of initial upside to start the day, and then it collapsed and closed below my 103.6 pivot. So this is crucial. This acted as a hard resistance numerous times over the course of the past week. It attempted a breakout, was able to hold above for a bit, but the daily closed back below. So I'll show you what this looks like on the daily chart. This is a bearish sign, at least for the short term. I do expect there to be a little bit more upside coming here for the dollar, expected to get up to this 104 mid target, which would be a retest of my key trend line. If you remember, we were talking about a potential rally for the dollar all the way back here, sub 100, because of my trend line I have right here. This is the one that goes all the way back to the .com bubble times. As you can see from over here, a very lengthy trend line goes all the way back here to 2001, and we did just retest it. That was the first main retest we've ever had of this trend line. So no surprise that we've seen a large rally since then. But at the moment, at least for the short term, as we've seen, there was a fake breakout. So that typically means that you'll see more downside before it attempts it, if it wants to attempt it at least, again for that 104 mid target that I'm expecting. And what does that mean for the market? Well, if the dollar is going to see some type of weakness, especially now after it's had a large rally, then that can help support equities for further upside, and that's kind of what we saw today, and that can continue to happen as long as the dollar remains stagnant. And with the dollar, that also means I like to talk about the VIX, because both work fairly similarly in terms of their inverse correlation to the S&P 500 as well as market in general. And we do have that fake breakout over here for the VIX, at least intraday, hard rejection afterwards for last week as well as this week so far. No surprise to see a rejection from over here. Eventually in September, I do expect there will be a breakout above here, but it is not time yet. Been mentioning that for the past about 2 weeks now, that it's not time for the clean breakout yet. We did have another rejection over here after our initial one early in August, and I do expect there to be more downside. My personal target is sub 14. I'd like to see this gap fill before it attempts another try at a breakout above 1760. So at the moment, there still is lower price discovery for volatility. So something else that's definitely notable, dollar as well as the VIX are showing more signs of downside, which of course can be supportive to the S&P 500. So just thought I'd share that with you guys today. And other than that, so far the week's been consistent with the Sunday video, a couple of nice setups for upside that popped quite a bit, as well as the general market going with that upwards thesis into the end of the month. Of course, be careful with Jackson Hole approaching, especially on Friday. Things can shake up in terms of volatility then, but for the most part, we are within that pop thesis at the moment, and there will be plenty of opportunities to short here in the future.